The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets in positive territory slightly, but all the markets in the green right now. S&P is up by 7, trading at 57.83. You got the NASDAQ 100. We're up by 38 points right now, 20,119. We get the Dow up by 75. How about the Dow, right? 42,596 yesterday. We're just off those highs, up by 75 points or 0.2% at 42,575 in the Dow. And you get the Russell up by 7 this morning. Crude catching a bid. Quite the fall yesterday to the 69 handle. And just like that, crude up by $2 at 72.35 this morning. You jump over to gold. Makes another high overnight at about 1 a.m. Eastern Time of 26.64. You see a little bit of volatility. Now we get some China news with a little bit of stimulus overnight. China trading higher. We're going to jump over to Pinduoduo. We'll jump over to Baba. All of those trading higher. Right now, you get the Hang Seng up 4.1%. All right, let's jump over to them right now. Why not? Because Hang Seng, 4.1%. There's Alibaba. You're getting quite a pop from 90 to 95. You got Shanghai up by 4.1% as well. All the equities going to be trading higher over there. Pinduoduo up by $5 as well. And it was interesting that I was checking these out prior to check out these monthly charts. All right, so this is Pinduoduo. 102.30. You're up to 212 at the beginning of 2001. You're back to $16. How about Alibaba though, right? Check out Alibaba. Basically where you were trading at 10 years ago in 2014. Now, you zoom in on the action in the last year, you're up from $66 made in January, and you're going to get a pop today. We're going to push $95 on Alibaba. So you have Japan trading dramatically higher. The Nikkei's up by about 0.5% right now. Over in Europe, you got the DAX up 0.5% right now. CAC rolls up 1.2% right now. FTSE's up by 0.2% right now. And let's jump over to kick things off with that China story. So they are throwing a decent amount at this market. And the headline, China unleashes stimulus package to revive economy and the markets. So they reveal their policy rate, reserve requirement ratio cuts, boost the property sector, and the stock market is what they announced here. The number they're talking about for their stocks, 800 billion won, which is $113 billion of liquidity support. Not that much in the grand scheme of things, folks. I mean, to put things in context, you know, Apple is not on the Chinese stock market, thank goodness, right? But they're talking about $100 billion in liquidity. Meanwhile, folks, you got a company like Apple with 15 billion shares outstanding. We'll do NVIDIA too, even better, right? And so you're talking about an $8 move for Apple shares, give or take, is what that represents in terms of $100 billion. You jump over to NVIDIA shares. I believe they have 25 billion shares outstanding, something like that. 24.5 is what they have. So, yeah, you're only talking about a $4 move in NVIDIA is the type of liquidity that they just put into their whole stock market. But it's a lot bigger than that. And here's some of the details. They lowered the reserve requirement ratio by 0.5 percentage point. Let's see. Yeah, they got mortgages. They're going to cut the rate of existing mortgages. The 7-day repurchase rate is going to be lowered to 1.5 from 1.7. They may cut the reserve requirement ratio further this year. The reserve requirement ratio will not apply to small banks. Can you imagine if the Fed came out and did this all at once? Reserve requirement ratio no longer applies to small banks. Can you imagine if that headline hit in the U.S.? People's Bank of China going to cover 100% of loans for local governments buying unsold homes with cheap funding, up from 60%. 100% of loans. Yeah, they have the unsold homes factor going on over there. Yeah, they got a big problem. But nonetheless, Yeah, without resorting to the bazooka stimulus China deployed in previous downturns. This is not quite the bazooka just yet. $100 billion of stock liquidity, not the bazooka, to say the least. But nonetheless, we wake up and we got some big stimulus going on in China. We'll see how that reverberates around. But as you can see, their indices, their equities trading higher with Pinduoduo pushing almost 108. And yeah, Baba, man, back to 2014 prices. Now be careful on Pinduoduo because they got Temu, which has some problems, man, regardless of China. Putting this back, we're jumping around. Yeah, that jump off on their earnings, they got some problems. And Temu is not going to be the next Amazon for the globe. Yes, they're going to be a player, okay, but they're not going to be, this is not going to be where TikTok likely takes out everything. Temu has a place, but guess what? Amazon's going to begin competing with that place, as in their place is cheap goods that are delivered straight from China, and they take a week or two to get delivered, and you save money for that. Amazon's going to have the same exact business plan up in 6 months. I'm generalizing, but something to that degree. And that's a niche market that is not the same as we see where people want their stuff. They want it now. They want it delivered by tonight, tomorrow, something like that, which Amazon encapsulates. Amazon right now slightly in the red. We're trading at 193. Big day for them yesterday, up to 194.45. We jump around to some of the other Magnificent Seven. NVIDIA shares, we're going to be flat today at 116.37 on the open. You jump over to Microsoft shares, trading flat as well at 433. Talked about Apple. A little bit of a lift for Apple to 228. We jump over to Intel shares. We'll get to Intel later in the program. Got an article pulled up, I believe, from the Journal, talking about that maybe Qualcomm is not the savior. Maybe Apollo is not the savior. Maybe it's not that simple. Boy, it has been quite a 10 days of news. 10 days of news for Intel in terms of securing more government funding. They come in now and they've got Qualcomm as a suitor. You have Apollo looking to invest up to $5 billion for equity. We jump over to Qualcomm shares this morning. Yeah, they had quite a little slide the last few days. The news comes out that they may buy Intel on Friday at about 3 o'clock. You're trading at 170. You drive to 164. Yesterday, you trade from 170 to a similar area of 165. You're trading at 167.54 for Qualcomm this morning, as they may be potentially going after Intel. AMD shares right now trading up a bit at 157 from 156.75 right now. We jump around. Dollar index, 174. Quite the volatility across the board, right? You look where we were last Wednesday for the Fed, of course, and it's remarkable that we're kind of right back where we were before that Fed decision, right? You spike lower to almost 100, you spike higher to almost 101.50, and the dollar settles right back in where we were prior to that Fed decision. You jump over the 10-year, and this is the most remarkable of it all. Folks, we got a downtrend channel right now going on a short-term basis, right? Check out this chart. Lower lows, lower highs. We make a low of 114.09 this morning, and we got the 10-year yield at 3.8%. I actually talked about on the show yesterday how intriguing it would be if the Fed continues cutting and we actually get a slight rise in yields, at least in the short term. There is so many cuts priced into this market, folks, that in theory over the next 6 or 9 months, unless the Fed cuts by almost 2 full percentage points, okay, they would be underperforming what the market has priced in. Nonetheless, we got the 10-year at 3.8% right now today. We got a lot to talk about. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We get the S&Ps up by 10 points right now, trading at 57.86. NASDAQ 100 in the positive by 53 points. That's a 0.25%. Dow, 0.25% as well, 42,607 highs as we speak. That's an all-time high. All-time high to the tick. Look at this chart, man. This is just bonkers, right? We've pulled it up before. You know, you take the COVID pullback, and then you have the pullback in 2022 with the markets when the Feds were on their hiking cycle. Aside from those two, which were very short-term pullbacks, and you could make the case, not driven by economics, as in you had the COVID scare, justifiably, when we didn't know what the future was going to look like, a pandemic for the first time in generations, and then we had inflation, which was a generational problem we hadn't seen in a while, and we had a hiking regime from the Fed that we hadn't seen in a while. You didn't have an absolute collapse like we saw in the dot-com bubble, like we saw in the financial crisis. You take those two little pullbacks out of this market, and this Dow has risen, along with the market in general, from 2008 to 2024. You're talking about a 16-year bull market run where you are now at a multiple of many times over, to put it lightly. I mean, you want to get funky. Let's go to the NASDAQ 100, where we're talking about going a 20-bagger. 20-bagger over a period. I mean, check that out, right? From 2009. Now, I'm cherry picking here, folks, okay? It's not like everybody had the ability to be cherry picking buying the low, but it is pretty staggering. I mean, you could even take the high coming into 2007. You're at 22.56. You're almost talking about a 10-bagger from the highs You're talking about a 10-bagger from the highs of 2007 almost, from where we are in the NASDAQ 100. But yeah, you take the bottom line, okay, and the S&Ps line up at 665 or whatever it is in 2008. There it is, 665, I believe. So you're talking about, what, an 8-bagger in the S&Ps? But it's much more fun talking about the 20-bagger in the NASDAQ 100 because that's doubling your money more than once a year. Yeah, you could have started with around 1,000 and you're pushing 20,000 over a period of 16 years. For 16 straight years. All right, we'll see where we go from there, and we'll see if inflation's over, and we'll see if we have the soft landing. But Fed Governor Michelle Bowman, she was the lone dissenter. She wanted 25 basis points. And let's get into some of the reasoning that she was talking about. The jumbo cut, quote unquote, could be interpreted as a premature declaration of victory on our price stability mandate. She said in remarks, well, it could be. It couldn't be interpreted as anything, right? She thought her colleagues should have taken a more measured approach to last week's half percentage point interest rate cut. She was on the boat for 25 by herself. And this was like the first dissent since a while in terms of a non-unanimous. Yeah, no governor had dissented since 2005. Okay? So not a small decision. You have to know that she's going to be on there. You have to know that she understands that there's going to be articles written exactly like this. She's the lone dissenter. She probably knew she was going to be the lone dissenter. You know you're going to have to defend that position when that happens. It's not a light decision to be made. Doesn't mean it's correct. Excuse me. But nonetheless, yeah. So she says, it could be interpreted as premature. That's an obvious statement. Accomplishing our mission of returning to low and stable inflation at our 2% goal is necessary to foster a strong labor market and an economy that works for everyone in the longer term. I mean, the other side of this coin is you have the Fed's preferred metric, 2.5% is what inflation is running. If you take out food and energy, it's at 2.6. The Fed's still at 4.75%, folks. All right? Their target range right now is 4.75 to 5. I keep saying it. We're just going to use the lower boundary from here on out because we're going to be talking about it a lot. The Fed is at 4.75% for the lower boundary of their range right now. Inflation's at 2.5, 2.6. Call it 3. Call it 3.5. You're still restrictive. That's the other side of this. You're still restrictive. What I wonder myself is, and Chairman Powell answered it to a certain degree. He related to it as in, why didn't you cut at the last meeting? Why did you not cut at the prior meeting and then come to the September meeting and feel like you had to go 50? And he talked about the 2 jobs reports they got in there and the weakening. And so you are seeing a little bit of fear that the economy is weakening and now is the time to go, and they probably should have went if they had the data prior to the September meeting, but they did not. But nonetheless, here we are. But you're still pretty restrictive at 4.75. My question would be, even for a moment, why'd you want to go 25 now? Why wouldn't you have gone 25 before? Was it those same jobs reports? So the concern she's talking about with going 50, though, okay, the big move would indicate the Fed officials see some fragility or greater downside risk to the economy. It definitely indicates that, okay, that markets might expect a series of large cuts, that large amounts of sideline cash could be put to work as rates fall, stoking inflation. She's worried about inflation and her general feeling that rates won't need to come down as much as her fellow policymakers have indicated. That's the part I want to get to. She's in the higher for longer camp. She doesn't think they have as far to go. She probably thinks the natural rate is more closely aligned to 2.25 to 2.5%. I'm generalizing there, but that last part is the most intriguing part of it all. Okay, of course everyone's going to be worried about this being a worrisome move. Is the Fed worried about the link? Yes, they are worried about it. But you know what's more intriguing? She doesn't think they're going to have to come down as far as the other policymakers think. She thinks the natural rate is going to be higher. Yeah. In light of these considerations, I believe that by moving at a measured pace toward a more neutral policy stance, we will be better positioned to achieve further progress in bringing inflation down to our 2% target while closely watching the evolution of labor market conditions. Now, I would like to square these two, though. Rates won't need to come down as much as her policymakers have indicated, yet she's looking for the progress of bringing it down to 2% still. I don't know. We'll see. Yeah, there's the benchmark rate right now, 4.75 to 5%. Of course, she respects the committee's decision, okay? But emphasize that the policy is not on a preset course. Even Powell said that to give himself some room, and will depend on the data, which she has said indicate the labor market has softened a bit but is still strong. I would agree with you there. I continue to see greater risks to price stability. She's in the inflation camp, which is remarkable considering where we are, especially while the labor market continues to bear to near estimates of full employment. Now, it's near estimates of full employment, but we have had a little bit of a rise, which is real. In terms of, we're at 4.3. How far do we got to go? We're at 3.7. What was the low number? You add those numbers up. You're talking about real lives, man. Unemployment. We've seen the job openings come down, right? We've seen all that stuff happening. Tough to deny that there's not some weakening in this economy. But nonetheless, the market loves the idea of 50 basis points, and we'll see where we go from there. Rates. Yields actually higher, sitting near 3.8%. We're coming back for the open, folks. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. All the markets in the green right now. S&P is positive by 6 points. We jump around to some of the equities. Let's kick it off. You got Microsoft down by about 0.25%. Amazon shares, look at that bid, up 0.7% for Amazon to 195. And we got all-time highs out there, just made in July of 201. These equities, man, remarkable. Imagine you're at 201. On July 11th, you're above 200. You trade down 25% within a month. By August 5th, I mean, just mammoth, right? Imagine that. Imagine if I'm sitting there on July and I say, hey, within the next month, we're going to be down 25% on Amazon shares. So somewhere in August, you're going to be down. But guess what? By the end of September, we're going to get it all back again. You're going to be up. You're going to trade down 25%, but to get back all of those losses, Amazon would actually have to trade up 33% to get back to the $200. You trade from 200 to 150, you lose $50. That's a 25% loss. This is a lesson in terms of protecting capital, right? Think about it. You lose 25% in Amazon. What do you have to make to get back from 150 to 200? You have to make back 33. So if you lose 25% in equity, you actually have to make 33% to get back to where you are. You're working on smaller numbers. Nonetheless, pretty remarkable move. You got Amazon catching a bid up by 0.3% today. You jump over to Tesla shares. They're in the positive. Looks like they're on the way to these recent highs of about the 260 area for Tesla shares. You're trading at 251.76 right now. You did open even higher, and they pull back on the open. We check in on the China stocks. Pinduoduo, a bid at the open as well, up by 6.8% right now. Baba shares up by 5.5% right now. If you've been holding Baba since 2014, congratulations. You might be in a profit finally after 10 years. You hold on to 320, you drive down, just to $58. Even this year, you were as low as $68. You're trading at $95. We'll see. As I mentioned, remember, only about $100 billion of liquidity for stocks. You jump over to the Analyze tab. Yeah, you're talking about Alibaba's got a market cap of $230 billion. What's Pinduoduo at? They're at $150 billion. Nothing near our giants, but $100 billion is not what it used to be. How about that line, right? How about that line? $100 billion isn't what it used to be. When you're talking about saving the Chinese stock markets through liquidity, not quite the bazooka just yet. So be careful on this first bounce. They did more than that, but we'll see how China moves. But nonetheless, today you're higher. And as I mentioned, we got Chinese stock markets up by about 4% over there. All right. Yeah, we were talking about Fed, and how about we got a little bit of weather coming down the line. Let's talk about this one. If you're in the Florida area, if you're in the southeast, yeah, seems like we're not quite out of Dodge just yet. End of September, we're coming into it. Hopefully, it's not anything too dramatic in terms of it's a potential tropical cyclone 9 is what they're calling it right now. But yeah, you're looking at about, zooming in, there's the cone. You're coming into the Gulf, maybe middle of the day Thursday you're going to be hitting potentially on that one. Yeah. And then when you look at it, it is interesting in terms of the flooding, the potential, the storm surge that comes up the line. Now, thankfully in Tampa, you're not looking at a direct hit just yet, but it's only Tuesday. This cone can change. This is as of the 8 a.m. Eastern time update on that coast. But yeah, you look at even something like that, right, where it's not even really expected to hit us. You look at, where are we? Storm surge, is that the one? Nope. Do I have to hit the understand? No, that's not the one. I was just looking at the potential storm surges. Rainfall potential? Flash flooding? All right, I'll find it. Nope. All right, nonetheless, storm surges abound. But nonetheless, we got 2 days. We may get a storm later in the week. Keep your eyes on that one if you're in the southeast of Florida. Okay, back to the markets. Jump around here. In terms of what else we got going on, yeah, we talk a little bit of bonds, commercial real estate activity. This one's interesting. We'll talk a little bit of Starbucks. So we were talking about this one when they got their new CEO, Brian Nichols, SBUX. Put this back on a daily. There's the move. They get their new CEO about 6 weeks ago. August 11th, August 12th, you jump from $75. You're $20 higher on this equity. $20 higher. You're talking about an equity with 1.1 billion shares outstanding. They got a new CEO, and you are trading almost $20 billion higher on market cap. And you know what? Yeah, some of them are saying, that might be a little bit of value that's tough to reach. just on the CEO acceleration. But Jefferies cuts the stock to underperform. Street low target. Analyst says issues facing the company will take time to fix. Pretty reasonable stuff, right? They've surged 24% through Monday's close since the replacement of their CEO. While the new CEO suggests necessary strategic change is now on the table, we believe execution will be challenged as issues like ops culture, value perception, and tech take time to fix. Lower the price target to $76, sees the stock falling 20% over the next year from Monday's closing price of $95. So yeah, be careful on Starbucks. They're going to take some time. In the longer run, Starbucks is going to be just fine, man. You know, they sell legal drugs on every corner in America. I kid to a certain degree, but really, right? And they sell it for a product that remarkably they've figured out how to sell coffee at $7 a cup. Right? I enjoy their cold brews, etc., all that stuff. They figured it out. They said, man, everyone's buying lattes for $6. What about the people just buying coffee? They said, well, let's launch like iced cold brew coffee and sell it to people for $6 instead of selling coffees at $2 a pop. Nonetheless, we like Starbucks, and even Tommy, he likes their egg bites, not coffee, but it is intriguing. You know, I end up going there, and it's just something that you're keenly aware of the margins that they are employing, and still you go there. You got to have your caffeine, right? Nonetheless, Starbucks, you're down a little bit in a positive market, down by about 0.7% today, as they've got quite the acceleration, but now they have to live up to those expectations. You look longer term on Starbucks, from $4 in 2009, $4. Man, Starbucks wasn't going BK in the financial crisis, up to 126. Yeah, so much for the NASDAQ 100, man. Starbucks outperforming the NASDAQ 100 over that run. Remarkable, right? Now, they were having some problems back then, of course, but nonetheless, you get Starbucks right now down a little bit to kick off the trading session. All right, what else we got going on out here? Yeah, it's interesting how you go back and forth, right? We talked about Michelle Bowman. Well, Goldman, no. Their CFO, they like it, man. They like the jumbo interest rate cut, puts the U.S. on track for a soft landing. And yeah, the move to lower the rates by 50, everyone's got an opinion, man. Puts the economy on track for a soft landing. Now, what's intriguing here is, where is inflation going to go? Because that's what Michelle Bowman's saying, right? She's not saying the economy. She's talking about inflation. She's not saying the economy. So keep that one in mind as we go back and forth here. I think this first 50 basis point cut is a clear signal in terms of the new direction. Yeah, nonetheless, we jump to it, folks. Everyone's going to have their opinion, but we're going to get to see it play out in real time over the next 3 or 6 months. Stay tuned, folks. We'll be right back after the break. S&P's rolling over a bit. We're still positive by 2. We'll come back. We'll take a look at some commodities. We'll talk some gold. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times the daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The S&P is actually rolling over negative in the red, just barely, by, we'll call it flat right now at 57.76, and they're talking about EEM, Emerging Markets ETF. There's EEM, a chart up 2.7% on the EEM, and this EEM is, to get it exactly, the iShares MSCI Emerging Markets ETF, okay? And yeah, you're talking about it, man. 45.25 right now, but what is in this is a lot of China and Taiwan Semiconductor. Sorry if you're available over there. You take a look at the holdings on this. All right, we're going to pull it up right here. There's your EEM, iShares MSCI Emerging Markets ETF. We jump to the holdings. 10% of it is Taiwan Semiconductor. 4% is Tencent Holdings. You get Samsung, Alibaba, Reliance Industries over there. Infosys, Pinduoduo. We've talked about Pinduoduo. We've talked about Alibaba. And Tencent is up about 2 to 3% right now. We jump over to Tencent Holdings ADR. Oh, make it 5% right now. Yeah, look at that, catching a bid. Tencent up from 50 to 52.50. So nonetheless, yeah, you're breaking out. But at EEM, emerging markets, boy, you got a lot of China, Tencent, Alibaba, Pinduoduo, and of course Taiwan Semiconductor and Taiwan getting a little bit of a lift today. TSM 2.25% up to 178.69, 179.77 was the high pre-market. You are higher as well, and there's your daily. You got a high out there of 193.47. We jump over to NVIDIA shares this morning, up by almost a full percentage point to 117 right now. We check in on Microsoft, down a bit. Constellation Energy, they're going to be running their nuclear power plant in 3 Mile Island. A little bit of exuberance yesterday. Hopefully you weren't buying that high at 271. You're back a bit at 252. There's the news breaking out of their deal with Microsoft. You trade higher yesterday. We put it back on a 5-minute. You can see, right? We spiked that high. We pull back, and we're right at the lows yesterday at 252. Longer term, yeah, I'd say there's a lot of promise for this equity. We'll see if it translates to earnings and appreciation of their equity price. But it's a brave new world in nuclear power, folks, when you got Microsoft securing a 20-year lease for their own nuclear reactor that begins in 2028. You talk about getting in line, right? What's the point of buying NVIDIA chips if you don't have the energy to compete with a company like Microsoft and ChatGPT that's got their own nuclear reactor secured for 20 years? It's almost surreal to think about the competitive edge that could give them, because for obvious reasons, right? Yeah. Excuse me. Okay. Let's see what else we got pulled up. Yeah, we talked about Goldman. talked about the storm coming down the line. Perfect. This is one I wanted to talk to that I mentioned earlier. So, the journal out there, this one's out this morning early, okay? And I think this might even be an opinion piece. No, maybe not. But they're giving kind of the counter case, saying, listen, it's never been this cheap. The company is, probably $95 billion market cap right now. Yeah, below 100 billion is how they put it, right? For the first time since 2012, okay? And that crash, understandably, draws out bargain hunters, right? You got Qualcomm. And what's so intriguing is where Qualcomm was just at the beginning of this year versus where Intel was. Qualcomm ran all the way up to 230. You started the year at 140. You're at 168. And then you got Intel. Started the year at 50. You're down to 24. Intel actually started the year out a more expensive company than Qualcomm. Qualcomm now double the size of Intel just that quickly. They said, yeah, maybe. Still, even a modest takeout premium would put the deal's value over 100 billion. 8 times the cash on Qualcomm's balance sheet. 8 times the cash is what Qualcomm might go after them with, and would involve substantial debt or significant dilution of the company's shareholder, or likely both. They don't have the money. Even Qualcomm. Wall Street has serious doubts. Qualcomm trading lower. Well, the suitor is always going to trade lower. Not always, right? But that's the way it goes. We're skeptical of the merits of any potential transaction. That's a B of A Securities report. Citi was even more direct, almost too silly to comment on, is how they put things. Yeah, I'd say they got to get it done, man. They need to change up the whole game, right? In terms of these two companies competing with the likes of NVIDIA, etc., AMD as you go forward. Intel is essentially two businesses, right? Semiconductor design shop, and they are a manufacturer. The restructuring they have is changing things up a bit. The share of the CPU shipments per year, you see the decline. Still some pretty remarkably lofty numbers when you look at, on the PC side, Intel share of CPU shipments, 79%, and on the server side, 75%, but that's not where they're paying all the money for. The foundry operation lost over $5 billion in the first 6 months of this year. Yeah. Hence, any buyer would need the ability to solve multiple existential threats while also getting such a deal through regulators that would include China. Given the company's facilities there, that alone makes a full Intel buyout far less likely. China has already stymied several large deals involving U.S. tech firms that include both Intel and Qualcomm. China. What's amazing on both sides of this, which I found interesting on the forefront as Intel presses on, is that, number one, you have, and I talked about this even yesterday, right? There's the argument here that it's almost mission impossible, right? They call it silliness. What did they just call it, right? Almost too silly to comment on is what one Citigroup analyst talked about it as, okay? And they're talking about the merits of any potential transaction are too silly. And then on the flip side of that, they're making the case that it's illegal because it's anti-competitive, because the merits are so substantial that the government shouldn't allow it. Square those two, right? You have analysts saying, come on, this is a joke. And then in the same article, you have analysts saying the government won't allow it because the merits of that transaction would be anti-competitive and monopolistic, and the Justice Department would probably stop it. That's the ones that I don't understand. But nonetheless, I bet we're going to see a little volatility playing out. And, listen, you get it in there, you put your stop in there, okay? That's what stops are for. Yes, on a company like this, an equity like this, you use a stop, you might gap away from that stop on the open on a Monday or on a Friday, okay? But, yeah, I like the value of buying a company that's under $100 billion, $97 billion, because the risk reward, the run up that maybe they achieve $200, $300 billion market cap, yeah, that seems feasible. Versus, okay, you're buying a NVIDIA right now. You're buying a NVIDIA with a market cap of $2.87 trillion. The odds that this thing is at $6 or $9 trillion in that same time, not saying it can't happen, but boy, That would take a lot, to put it lightly. Nonetheless, we got markets chopping around. S&P's negative by 2. And as I mentioned, we're going to finish it up with gold. Gold up by $5. We'll talk some gold. We'll talk some crude oil as well. We'll talk some dollar and some yields. Don't go away, folks. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's negative by 2. We're going to jump around. We'll call it the lightning round. We got the gold contract right now pushing 2660, right back where we were at about 6:30 a.m. this morning. You see where we were at about 1:30. That was an all-time high, 2664. We check in on crude. After that spike higher we got in the overnight session, we climbed to 72.40. We've given it up this hour a bit. We're at 71.85, still up by $1.50 in the price of crude. Now, a couple articles I want to touch on. You got Boeing sweetens their labor proposal in a best and final offer as the strike enters the second week. I found it so intriguing. I saw this headline everywhere from last night to this morning. There's no such thing as best and final offer. What does that even mean? I mean, I know that's what you always want to say, but if they don't take it, what happens, right? You go back to the drawing table. Nonetheless, we jumped to Boeing shares this morning. You got Boeing down by 0.6%. They got quite a run up yesterday. You give up most of that gain. Right now, we're down by $1 on Boeing shares. Jamie Moore Jeez, I'll get it. JP Morgan CEO Jamie Dimon warns geopolitics is getting worse. He's kind of been gloom and doomy a little bit. Not really gloom and doomy, but he recognizes some of the risks is a better way, more so than some of the market. It's intriguing. I feel like every week or so, there's an article about Dimon talking about don't be so sure, the soft landing's coming, right? All this stuff, geopolitics as the world's biggest risk is what he's talking about. Yeah. Risks abound, to put it lightly. All right. And then what else do we have up here? There we go. I wanted to get to this article, okay? And we only got 30 seconds, but boy, it is intriguing. This is probably the future. Meta's smart Ray-Ban glasses spawned a Silicon Valley hit. How about selling like 800,000 pairs of these things? Yeah, it's not going to be 700,000 pairs is what they sold. They only sold 300,000 pairs of the glasses they had in 2021. But yeah, throw them in some Ray-Bans, right? You can record some video on top of it. That's where the future's going, man. Today, though, not so much. You got Meta down about $5 on the open. You're down 1 percentage point. Folks, thanks so much for kicking it off. Stay tuned. We got Basil Chapman coming up next. My dad, this afternoon, special guest, Fred Ernest from Vista Gold, VGZ. Is their symbol Vista. He's coming up at 3:15 with Tom O'Brien this afternoon. Have a great Tuesday, folks. We'll see you tomorrow.